Okay, I hope everyone can hear me. My name is Richard Perry. I am the market analyst at Hantec Markets. I've been doing these webinars with FX Street for a while now, and this is my latest one on Bollinger Bands, just basically introducing you to the concept of volatility. Now, first of all, I'm going to have my disclaimer just because I'm going to be talking about live market information, and I believe that you should read and understand this disclaimer just in case. There will be another chance to look at it at the end, so don't worry if you haven't read all of it. Moving on to my biography, as per usual, I'll try and keep it short, but worked in the city for 13 years. I've been an analyst doing trading of forex, CFDs and gold for Hantec Markets, and been on CNBC, and basically my experience and also my qualifications, I hope would make me qualified to talk to you about this today. Now, the agenda for today is a little bit of theory as per usual, different uses of Bollinger Bands, the signals you can get from Bollinger Bands. I'm then going to look at some live market analysis, so we're going to bring in a load of other indicators as well. And throughout the whole of the webinar, I hope that you would be asking questions, and I will try my hardest to answer them as and when they come up. And if I don't get to answer your questions, it might be because they're maybe not as relevant as the topic that I'm talking about at that exact moment. However, I will hopefully have a chance to answer all your questions towards the end if that is the case. Anyway, so let's go. Right, Bollinger Bands. Now, basically, Bollinger Bands are one of the most, one of the more mathematical indicators that we come across in technical analysis. That's because Bollinger Bands basically introduces us to the concept of volatility and the use of standard deviation. We've got here on the slide the bell curve, basically, which shows standard deviation around around a mean and the volatility around that mean level. Now, Bollinger Bands work in a very similar way, and they use standard deviations around a moving average. Now, Bollinger Bands basically were designed by a gentleman called John Bollinger in the 1980s, and they use, or the theory is that you should use a 20-period or 20-day moving average and a 2.0 standard deviation. Now, statistically, I could quickly go back to the slide previously, that statistically a 2 standard deviation Bollinger Band would give you 95% of the price action within the bands. So it is a significant amount of price action, and theoretically the price action would be within the bands, and subsequently we're looking for extreme levels to give you trading signals. Now, what do Bollinger Bands show you? Well, they show you where the price is relative to recent history, and also where the volatility, more importantly, is compared to recent history. They therefore give you danger signs and show periods of high risk. What they don't give you, however, and I stress this, is that they don't give you absolute buy or sell signals. That's basically because they need Bollinger Bands. You need to use Bollinger Bands in conjunction with other indicators, and I will talk to you in a little bit about that, but it sort of ties in with my whole ethos through technical analysis that you should always use multiple indicators anyway, but certainly Bollinger Bands is one of these indicators that you should be using Bollinger Bands for. Okay, so basically Bollinger Bands are an envelope around a 20-period moving average. Now, what I'll do is quickly show you this Bollinger Band. Okay, here we go. Now, I've already had a question, why 20 only? Well, 20 is the basically the chap who came up with it, John Bollinger. He sort of did a study, and that was the moving average that he found worked best. And you can see here that this is the 20-period moving average on the top, and this is the Bollinger Bands, 2 standard deviations around the 20-day moving average. Now, you can, and some people do use envelopes, which are just basically percentage moves around a moving average. And in this case, I've got cable here on this chart. And the big question, I suppose, with envelopes is exactly how big or how wide the percentage move you have, because obviously forex, for example, a 1 or 2% move on forex is a fairly big move, but a 1 or 2% move on equities or maybe an index is not so much of a great move. So we need to basically be far more individualistic with those envelopes, and I've got here a 1% envelope around cable. Now that's all well and good, but when it comes to the sharp moves, when cable becomes increasingly volatile, as you can see, as it has done in recent weeks, a lot of the price action takes place outside the envelope. But with the Bollinger Bands, that actually is a very strong technical signal that we saw back in mid-September, when the price action was outside, only just came outside the Bollinger Bands, and it sort of gives you more of a positive signal, because I think something that you can rely on much more. I don't think that I mean, the percentage bands do have their merit, but I think that they're more of an absolute indicator rather than a relative indicator. And I think that because of the concept of volatility is introduced into Bollinger Bands, I think that makes them far more useful than envelopes. Now the next, again, as with a lot of our trading indicators that we use, you can change the parameters for it. And once again, the chap who's asked me why 20 only, well, you can change both the parameters of the moving averages and also the standard deviations. Normal trading practice would be that you change the standard deviations rather than the moving average, but you can change both. Here on this chart, what we have is three different standard deviations. You've got the 1, 1.0, 2.0, and 3.0. The blue, this light blue is 1, then 2 is the red, and the dark blue is 3. Now you can see that obviously it encompasses more and more price action as you get higher, and that's, as I said, back to the beginning. 99% of price action is encapsulated by 3 standard deviations, 95% by 2, and only 68% by 1 standard deviation. Now the concept, as ever with technical analysis, is that when you change the parameters of the accepted indicators, that's all well and good. That's your choice. I recommend you do your research and do your back testing, because the indicators are quite often well studied by the person who invented them. But also the fact is that they did it for a reason, and certainly, for example, a 1 standard deviation would give you a lot more false signals. It would give you a lot more signals, but a lot more false signals as well. So you've got to be very careful of changing that. Some people would use maybe 1.5 standard deviations and maybe 2.5, but I think as per usual with my technical analysis, how I follow it is that I don't tend to play around with the parameters too often, and I like to stick to what I know, which is the pure technical theory. Anyway, so there are different ways, as I said, you can change the parameters for you. Right, so just what do the Bollinger Bands show you? Well, wide Bollinger Bands basically indicate periods of high volatility. You also get sharp price moves and extreme highs and lows compared to the previous price action. Alternatively, you've got your narrow Bollinger Bands, which suggest that the standard deviations are decreasing, or the amount of deviation around the mean is decreasing, and it indicates low volatility and a consolidation in the price. So we've got this little chart here that shows you that. Okay, so there are four basic concepts or rules or principles, I suppose you could call them, in Bollinger Bands, and basically those four concepts sort of lead you on to the trading signals, and I'll talk about them in a minute. So basically, the first one is the fact that prices hitting the band can either signal a continuation if other indicators, and I stress this, if other indicators confirm the price strength or weakness, or they can signal a reversal if the confirmation is not present. Now, as I said earlier, the signals are dependent on the confirmation of other technical indicators, and Bollinger Bands don't give you absolute trading signals, so you need to be aware of that and be very careful with that. And I believe this, as I said earlier, this ties in with my whole concept of multiple confirmation that is the best way to do your technical analysis. And I believe throughout all of the indicators that I've talked about and will talk about, I believe that multiple confirmation is the you should look for multiple confirmation, because trading in isolation on a single indicator is, I believe, the quickest way towards a losing trade, and I think that's something you need to just bear in mind. Okay, a couple of questions that have just come through. There are many advantages to be looking at the same Bollinger Bands as the rest of the market, i.e. 20 period times 2. I agree. There are indeed, because that will obviously help to suggest that that's going to be where the reversals are going to be coming in. So yes, I do agree with that. Which oscillator do you use with Bollinger Bands? Now, I will talk to you at the end exactly how exactly the sort of indicators that I look at, but I would always go for RSI and MACD as my two favourite. Well, RSI is an oscillator, MACD isn't necessarily an oscillator, but they are my two favourite momentum indicators, but also stochastics as well. Yes, that is what I look at. Okay, so number 2, tops and bottoms that are posted outside the bands, followed by a second top or bottom within the bands, signal a trend reversal. Now, this ties in with the concept of reversals, which I will talk about in a bit. Number 3, a move originating at one Bollinger Band tends to move towards the other band. Now, this is important because it sort of that only comes into play when you're trading in a sideways trend or no strong trend. So this is basically the concept of where you play the range, and you use the Bollinger Bands to play the range. And as I said, no strong trend in place is the only way you can really confidently play that trade. And finally, sharp moves will often be seen after the bands tighten, and that is the third concept that I will look at, which is to do with breakouts. Okay, now reversals. This is point 2 on those basic rules. Now, okay, so reversals. So when we're looking for reversals, we need to have the Bollinger Bands at a relatively wide space apart, and we're looking for an entire trading band outside the Bollinger Band. So in this diagram here, we're looking at this down here, where you've seen a strong move to the downside. The bands are relatively wide apart, and you've got an entire trading day outside or trading period outside the bands, and that suggests, as I said, a danger signal with the price action, and the prospect of a reversal is subsequently very high. Okay, so how are we going to see that on the charts? Oh God, where are they? Is it that? Yes. Okay. So reversals. Okay, so this is FTSE back in March, actually, where we've got the Bollinger Bands relatively wide apart. You've had this strong move to the downside, and you've got FTSE trading entirely outside the bands. You then see your signal comes with a close when you're back inside the bands, so you then start to think about putting on your long positions. And as I said earlier, it is often the case where you see a move where the whole trading period is outside the bands is followed by a second low within the bands, and that is also a confirmation signal as well. So you can then start to think about the reversal pattern that you've got, and you can then start to think about going along. And in fact, what happens is we see that reversal, and again it then comes back towards the other band, and you get an entire reversal within the bands. So that one worked very well on FTSE. Okay, so on the other way, on the downside, you've got, this is dollar yen back from, oh god, it's quite a long time ago, June 2009. But still, you've got the bands are relatively wide apart. There's no, as I said, there's no real trend going on through this chart, so you can effectively use that entire trading period outside the band as your reversal signal. And again, once more, it works very successfully. And you see the dollar yen move all the way back down towards the lower band. Again, as I said, this is where we see extreme price action outside the bands, and subsequently that would suggest that in terms of a mean reversion, you're pretty much looking for mean reversions in Bollinger Bands, and when there is no strong trend, that's when mean reversions work the best in Bollinger Bands. And certainly outside that entire trading period, outside the bands, suggests an extreme move, and a mean reversion is works out subsequently very well. Okay, what about range trading? Well, this is the same. It's in a way, it's a similar sort of concept, but you're not getting necessarily the moves outside the bands, because the as I said, you've got these sort of no real trend going on. So the market's ranging sideways. The Bollinger Bands are consistently moving sideways. No real direction in either the market or the Bollinger Bands. And subsequently, you can then start to use any sort of moves back from one part of the Bollinger Band, from the lower band up towards the upper band, and then reversal again. And you can, as I said earlier, what a move originating from one Bollinger Band should theoretically move towards the other Bollinger Band when there's no strong trend in place. And that is exactly what you do. You play the range. So you would buy at the lower Bollinger Band, and you would sell at the upper Bollinger Band in this case. So can Bollinger Bands be used to initiate a strangle or a straddle? Yes, indeed they can. Options trading is one thing where Bollinger Bands are very good at being used. I would say especially when the Bollinger Bands go very narrow, because that would be where the trend is, sorry, the volatility is extremely low, and you are then looking for extreme move. So yes, a strangle or a straddle, yes indeed. If you're buying options, yes, I would definitely recommend that. Writing options comes with a whole different ball game, and to be honest, it's not part of my disclaimer, and probably talking about that would be unwise. But yes, I would say that yes, using Bollinger Bands in options trading is still possible. Okay, so give you a chart as to how that actually looks. Okay, this is your dollar yen across 6 months, actually, 7 months, May 2012 to November 2012. As you can see, no real trend, moving sideways, and you can see that dollar yen worked pretty well in terms of range trading through this period here. So, buying at the bottom, selling at the top, and yes, it did work pretty well. Obviously, doesn't always work, and again, I stress that this is just me looking at Bollinger Bands in isolation, but you'd certainly be looking at other technical indicators as well to help to derive your strategy. But certainly, yes, it does tend to work very well, or certainly did in in Bollinger Bands, I always get you asked this question. Do you not use candles? Yes, I do use candlesticks. The reason by me using bar charts on Bollinger Bands is because I believe that it's just easier for you to see, basically, the Bollinger Bands at work, because there's a lot of colour that goes on in the charts. But yes, I do use candlesticks, and I will show you in a bit my candlestick charts towards the end. But yes, I do use candlesticks. How do you know that the market will enter into a range? That's a very good question. Again, you use your other indicators, I believe. So in this instance, how do you know that dollar yen has entered into a range? Well, you've had this downtrend. Here. That downtrend has subsequently been broken. And also, the market then starts to find resistance at old levels. That is a big pivot level, certainly. Old lows, new highs, reversed at that high. So at that point, I would say that you've got that signal at that high. Additionally, it is a bearish key one-day reversal as well. That's coming into bar chart analysis, but still, you've got a signal that suggests that you have broken that downtrend, but you're now not moving into an uptrend because you had a reversal signal at that key resistance. So I would say that at that point you're then beginning to think this is a range trade, and subsequently the bands are very flat, and you can pretty much play this range throughout. And again, towards here, it pretty much went sideways, finding support at the lows and then rallying towards the highs. So yes, I believe that is your signals there. Right, okay. So that's range trading. Next one is trending markets, uptrends and downtrends. So you're looking for strong trends here. And you're basically going to be trading with the trend. Now that sounds very obvious because that's exactly what I've spoken about 100 times before. You always trade with the trend, certainly in a strong trend anyway, but even in this Bollinger Band analysis, that is exactly the case. And as with this diagram that I've got here, this illustration, you basically see the price hugging the upper Bollinger Band in a strong uptrend, and it is likely that the majority of the price action is going to take place in the upper portion of the Bollinger Bands, and therefore any price action that comes below the moving average and into the lower half of the Bollinger Bands is subsequently seen one of two things. You can either see that as a buy signal, I believe, or you basically take it that there is an extremely high risk to any short positions. So in that instance, if you're trading against the trend, then the risk is extremely high that the price is not going to go much lower from there. So you would be very wary of remaining short in that scenario. So yeah, and in this strong trend, the prices are likely to continue to move higher. So you basically trade with it. So as I said, any sort of move back towards the lower band is a buy signal, and yeah, you basically play you hug the upper trend with the price. Similarly, in a downtrend, you're looking for prices to be in the lower half of the Bollinger Bands. You're looking for any sort of move into the upper half of the band to be seen as a chance to sell, and subsequently any prices rallying towards the upper half is a extremely high risk to any long positions. So let me show you how that works in practice. Okay, this is dollar yen. Again, the question I'm sure will come: how do you know when you're in an uptrend? Well, I believe in dollar yen, you've been trading sideways here. This is the same sideways trading period that I spoke about in this chart. Zoomed out a little bit more into this one to subsequently turn into a big uptrend. So you've been in this sideways band. I'll give you the crosshairs. You've been hitting resistance on this level, and then you subsequently break and close above that. and I believe that that is a suggestion that we're now moving into an uptrend, because you're confirming this breakout with subsequent trades, subsequent periods above the breakout area anyway. So you're beginning to form a new trend. Subsequently, indeed, you get a lot of price action in the upper portion of the Bollinger Bands, and certainly by December 2012, you're thinking, okay, well this is going to be a strong move, and you need to go with it. And subsequently, if you'd gone with it, the price continued to hug that Bollinger Band all the way up, using in February 2013, using a movement towards the lower Bollinger Band as another chance to buy. Again, a move into the lower band as another chance to buy in April. Again in May, all the way through this big long uptrend. And yes, it was a very, very strong move that we saw. Now the end of that trend, I suppose, comes with a couple of trading days that happen outside the sort of. I mean, I suppose outside, but also you're seeing the Bollinger Bands widen and move apart, and you're subsequently starting to find a downtrend as well. So you need to be wary at that stage. But again, I stress the fact that you'd be looking at other trading indicators to help derive when and where at what point you've got your breakdown of your trend. Right. Have I got another one? Yeah, yes I do. This is euro dollar. Very recently, actually, euro dollar in the last few months. You basically had been moving sideways in euro dollar. We actually formed a big head and shoulders top pattern, but that's by the by. You then started to break down that key support, which was 34.75. Subsequently, you then start to see the bands widen significantly. So breakouts are something that I'll talk about in a bit, but you then start to see the bands widen, and you start to see a new trend form to the downside. So, and you see the price hugging the Bollinger Band. So you think, okay, this is a strong trend developing here. So I need to be either short or just very careful of, or basically close any long positions at this stage. And you're looking for a move back towards the moving average as a chance to sell again, and subsequently you got it, and then you haven't even come back towards the moving average since then. So extremely strong down move on the euro dollar, and I think it's going to continue. That's what the Bollinger Bands here are saying on this euro dollar trade. Okay, I've talking about hindsight and how do I know about that in advance. I'm presuming, so I didn't catch the exact point at which you asked that question. I'm presuming you're talking about when you actually realise you're in a trending position. As I said, you're looking for breakdowns. You're looking for other indicators to help derive your new trend. And I think certainly on this euro dollar chart, you would have seen the fact that you would have used pattern analysis to get this big head and shoulders top in place, and the breakdown of that key support from that January 2014 low 34.75, I think subsequently would have triggered your thought process to say that, okay, we're going to start breaking lower now, and subsequently I think that is what we had. Where can a pullback occur on euro dollar? Well, I will cover that in a little bit when I talk about euro dollar at the end, so just bear with me. When do you wish to teach a strategy with Bollinger Bands? Oh, hello. Okay, I'm just giving you some basic signals from Bollinger Bands. Strategy, I believe, comes with just looking at. I think you need to. Comes with your own your own opinions and how you trade the market, because how I would trade the market and how someone else would trade the market can be completely different. And a trading strategy, I think, is unique to your own trading style. So I wouldn't want to impose my trading strategy on you anyway. But certainly, I think Bollinger Bands have got a part to play in your trading strategy. So that is something that you can be looking out for. Right, so the final signal that we get with Bollinger Bands are breakouts. Now this, I believe, is probably the most interesting form of move that you get with Bollinger Bands. It's basically the move where you have low volatility and then subsequently you get the breakout with the bands tightening. You get the bands coming incredibly narrow, and then you have a breakout above the bands, and then the bands burst apart, and then you see a strong price move in the direction. So I think this is probably the best signal you can get off Bollinger Bands in isolation. But again, I stress the fact that you should be looking at other trading indicators. But certainly, I think this is I believe this is a very strong indicator that you get, indication signal that you get from Bollinger Bands, where the bands come very narrow, and then subsequently you get a breakout and a strong move with the bands coming apart. Because basically, as the bands expand, you go with the move. In a bullish signal, you have the bands coming together. This is a bullish breakout. Bands coming together, very narrow, and then suddenly you get a close above, another close above, and you're thinking, okay, this is now where we're getting the breakout. The bands are subsequently going from narrow to extremely wide very quickly, so you then go with the move on that move. It signals an end to low volatility and also approaching high volatility as well. And high volatility is basically what we're looking for in terms of trading. So I believe that this is the signal that probably would give you the best return. In a similar way, you get the bearish signal, which is a close below the bands in the narrowing scenario. And then you get the bands widening very quickly, and it is an end to low volatility and alerts for high volatility again. And you go with the expansion of the bands as they move. And let me show you that in practice. So we've got here dollar chuff or Swissy. Okay, right. So you've had the Bollinger Bands coming very narrow. This is dollar Swissy narrow. So basically, you're in this period of trading range. Effectively, the bands come very narrow, and then suddenly you get this break, and the bands begin to become much wider, so you then go with the break, and subsequently, if you'd done that, you would have got this strong move to the downside. Got the bands extremely wide. You're actually trading with, as I said, with the trend in that scenario, because the bands, the price is hugging the band, and that is a very strong move. A very strong move indeed. And again, that worked very well. On dollar CAD, November 2013, we've had this sort of consolidation period for about a month or so, where the bands came very close together, narrowed, and they pinched together, and then subsequently you got the close above, you got a series of periods above, and then you get the bands widening, and then you go with that widening on the breakout. And that widening is a very important issue, because that's, as I stressed earlier, that is a reflection of increasing volatility, and that's how you make a lot of money on forex markets. So yes, that is dollar CAD, and so basically, just in summary, you're looking for reversals when the Bollinger Bands are very wide. You're looking for breakouts when the Bollinger Bands are very narrow. When the Bollinger Bands are flat, you're looking to play the range effectively, and you're basically in a very strong trend, as I said earlier on this dollar chuff. When you're in a very strong trend, you play the hug of the band, and that's Bollinger Bands. Now, okay, so what I'm going to quickly do, got a bit of time to go through the markets. I know a lot of you are interested in euro dollar. Okay, so this is euro dollar. I haven't got the Bollinger Bands on euro dollar, so what I'll do is very quickly talk. I mean, I did touch on euro dollar here with the Bollinger Bands, and I believe that the Bollinger Bands here are suggesting that you're still in a very strong move to the downside, and any rallies are still a chance to sell because you're in a very strong move. But Bollinger Bands are still very wide apart, so. Yeah, and you're hugging the band on a consistent basis. So on the euro-dollar chart itself, this brings in, I've got on my chart here, I've got the RSI, I've got the MACD lines, and I've got the stochastics, moving averages across the board, and for those who were interested earlier, I've got my candlesticks. So what are we looking at here? Well, if I zoom in, you have had this RSI that's just in ridiculously bearish configuration, as is as are the MACD lines and stochastics. Just across the board, everything is bearish. Recently unwound to 30. I say unwound to 30. Got to 16, but it certainly looks like once again you're pulling away to the downside. Now, the interesting thing also is we've now broken back below the 61.8% Fibonacci level of the big rally higher. This big move from 2040 up to 3191, and that suggests, in my opinion, that we're probably now going to retrace the whole way to 2040. Then we've broken these key lows from 2013, April low and the July low around about 2750. They were broken today, and it looks like increasingly that the next near-term level is the 2660 low from November, but subsequently there's no real support on the downside. So this move is it's just ridiculously bearish euro dollar at the moment. Consistently, every time we get a consolidation it gets sold into, you've just got to go with it, I think, at the moment, and the Bollinger Bands are certainly suggesting that as well. So yes, it certainly looks very bearish. Okay, cable. Now, cable's been very interesting recently because it engaged in this recovery, and I believe that recovery was just merely unwinding back towards its downtrend. Although yes, you had a slight move above that downtrend, I don't think that was necessarily a serious break of that downtrend. I think if you look at all these momentum indicators, they've just literally just unwound towards neutral again. RSI back to 47 on a couple of peaks, and the MACD line still in negative territory, still there, negative configuration. So I think this is just a bear market rally that's subsequently going to find out for the selling pressure once again. Now, the key support near term is 6280, which was a gap low from what is that, the 5th of September, and yes, I believe that is now the key support. If we lose 6280 on a consistent basis, I think we're going to be then retesting 6160 and then probably retesting the low as well. I think cable is not necessarily as bearish as the euro. In fact, across the board pretty much with cable, I believe that we may now be entering into a bit of a more of a consolidation phase on a medium to longer term basis, whereby we're going to be trading sideways. But I don't see we're going to be recovering in any significant way. I think if we were going to get a recovery, I think it would have happened it would have happened with that Scottish independence referendum vote, and the getting rid of the uncertainty. Now, I'm just going to read a couple of these questions because I haven't been able to see them for a bit, so hold on. Let's talk about cats. Good work. Everyone loves a cat. Apart from the man who's going to skin one. Okay. Crude oil. Here we go. Wow. Okay, so very quick. I'll just do crude oil, then Brent. I don't like Brent at the moment. Got a big downtrend channel in Brent. Look at this, the MACD line's just awfully bearish, and also the RSI. Look at that RSI hitting 47 on the through this up period here. It was using the mid 40s as the basis of support on the RSI. That has now become the base of resistance. So 47 is the level on the RSI, which is an ideal selling opportunity. You're sort of mid-range a little bit, but I still think that you've got a series, this downtrend channel on crude, on Brent is significant. Also, look at this 21-day moving average. What a basis of resistance that is now. Consistently being used now since July as the basis of resistance. Currently comes in at 99.28. So you have a little bit of room to rebound, but I think any sort of bounce is a chance to sell. Also, where are we going to go? Well, obviously we're being pulled lower by this downtrend channel. We've also broken this April 2013 low, which was 96.75. So it looks like we're coming back towards this 2012 low, and that's 88.50. That is so that's another $8 on the downside. So that's a significant move still yet to come potentially on oil. Now, obviously, oil has significant fundamental protection potentially from OPEC, but apparently the next OPEC meeting, I believe, is not until maybe November. So it could well be that we're still set for some further downside. But yes, this Brent crude is not looking particularly positive. Not a Bollinger Band in sight. Well, okay, let me show you. Okay, we're back on that. Okay. The reason I don't, because I know you're probably wondering where my Bollinger Bands are. I've actually got 5 charts that I look at across my screens, and you've only got one screen, and it is my main screen, but I've got Bollinger Bands on a different screen that I do look at. So I will look at your Bollinger Bands now on Brent. And I can imagine, as I said, yes, they are extremely bearish. Big, strong downtrend. You're looking to use any sort of move back towards that 20-day moving average as your chance to sell that 20-day at 99.11. You're consistently hugging the downtrend. Consistently hugging the lower Bollinger Band, so the trend is strong, and it just looks continually bearish. So that is the takeaway I would have from that. Okay, so dollar yen is another very interesting chart. We are, wow, sharp reversal in dollar yen today. Interesting, considering we've been so strong on the dollar. That is interesting. Okay, I still think we're in this big uptrend though. And where are we at in terms of momentum? Well, we've got RSI just correcting at the moment, but I don't think it's going to be anything significant. If you look at the intraday chart, we're still in this sort of sideways range. It's only in the last couple of hours actually dollar yen started to fall away significantly. Lost about 50 ticks in a couple of hours really. I'm presuming something's come out. I haven't seen anything. The housing data was not housing data. The durable goods was very strong, so that's interesting. I don't know what's happened there. But yes, we're still consolidating sideways across the last few days, really. This could turn out to be a big double top, but I still think that any move back towards 107.50, I believe, is a very good buying opportunity on dollar yen. What is going on with that? Okay, thank you. Right, anything back towards 107.50, I believe, is a strong buying opportunity. 107.50 is that old breakout around about 107. Well, there's a top pattern that implies 107.50, but also there's a breakout support at 107.40, so that's sort of my level where I'm thinking about coming back to on the downside. Right, okay, so looked at a few major currencies for you there. Okay, so thank you for listening today. Just a very quick summary. We do run Hantec FX, Hantec Markets do run webinars, and you can sign up to them at hantecfx.com/webinars. We also have a load of research that includes daily morning reports, and it's all free of charge. I do videos and weekly commentary as well. So again, that's hantecfx.com/market research. Interestingly, we are running a trader competition for FX Trader of the Year 2014. This is the third year we've done it. You can still sign up. Registration is ongoing for that contest, and it's on a demo platform basis on that. And basically, the total prize fund is $18,000, but the winner receives $10,000 live trading account money with Hantec Markets. So it's very interesting, and it gives you an opportunity to test your trading skills and anything you may have learnt. I would say that's a pretty good deal. So there is you can sign up for that, and it's something that we're running in partnership with FX Street as well. So get on and sign up to that. If you're interested in Hantec Markets, we're basically a London-based UK-regulated broker. We specialise in forex, bullion, and CFDs, and we do have retail and institutional clients trading worldwide. We operate a 100% automated no-dealing desk model with competitive spreads on MT4 and CurrentX platforms. You can trial both of those free of charge for 30 days with a demo account, and as ever, just go to our website, hantecfx.com, for that. Any feedback you have, please feel free to get in contact with us, marketing@hantecfx.com, and on Twitter my handle is at hantecrich. And I had a couple of questions last week about any slides. Well, if you'd like the pack of the slides, then please feel free to email us at marketing@hantecfx.com, and I will try and sort it out. Yes, indeed you can have my email address. Why not? Unless you're going to send me something nasty. So on that note, I will leave you with my disclaimer once again. And thank you very much for listening today. Lots of good questions. Thank you. It's good that you're all interested and keen to learn. And I hope to have you again in a few weeks' time. I believe we've got another one. I think it's on the 9th of October. So thank you very much, and goodbye. Thank you.